This is chapter 6, and in chapter 6 we will be talking about activity-based costing. And I gave you a brief overview of that in the introduction video for week 3, and then hopefully you've read through chapter 6 and you have a general idea of what we're talking about with activity-based costing. But basically what we're doing is taking predetermined overhead and separating that by activity within the plant so that we can get a better allocation, which gives us a better product cost, which gives us better information to set selling price and anticipated profits. So I'm looking at problem number 617. This is Smoky Mountain Corporation, and they have two types of hiking boots, Extreme and Pathfinder. And they gave you the information, selling price, direct material, direct labor hours per unit, annual production, and sales. They tell you that this company uses traditional costing system where manufacturing overhead is applied to units based on direct labor hours. They tell you that estimated overhead for the plant is $1,980,000. That's estimated total overhead. And they tell you the estimated direct labor hours, which is what is driving up their overhead, is 120,000. And so it asks us, first of all, in number 1, to compute the product margins for the Extreme and the Pathfinder products under the company's traditional costing method. And so we're going to calculate our product margin and try to figure out, based on using one overhead rate, what is the product margin for each of these. And so we're going to look at the Extreme, and we're going to look at the Pathfinder, and then we'll go ahead and analyze the total as well. And so your product margin, if you remember, is your sales minus your direct materials, direct labor, and manufacturing overhead applied. So the first thing we have to do is figure out how much overhead was applied. And so if I come up here and I get my total overhead divided by my total direct labor hours, which is my driver, then that is my manufacturing overhead applied per direct labor hour. Okay, so that's what that means. And so what I'm going to do to calculate this product margin, I'm going to start with my sales. I'm going to use my direct material cost. I'm going to use my direct labor cost. And then I'm going to look at my manufacturing overhead. I'm trying to abbreviate so I can get it all in here, applied. Okay, and so I know that my Extreme sales, that was given to me, I believe. Let's see, it was given to us 140 per unit. And let's see, does it tell me how many I sold? Compute using the costing system. Hold on just a second, guys. I got to see if it gives me my units sold. Okay, I found it. It is the estimated annual production and sales. I missed the and there. So my sales, it's 20,000 units. And my sales price per unit for the Extreme is $140. My direct materials, and this one's easy because your sales and your production are the same, so it's 72 per unit. My direct labor, 20,000 units, and it is $24 per unit. Now be careful when you do labor. Sometimes it'll say per hour, sometimes it'll say per unit. If it's per hour and it takes 2 hours, then you've got to multiply that by 2. But this one says per unit, so I'm okay with that. And then it tells me, well, I calculated that my manufacturing overhead is $16.50 per unit. And I know that's applied based on direct labor hours. And then it tells me that direct labor hours per unit is 2, and there's 20,000 hours. So that's how I calculate my manufacturing overhead applied. And so then if I add all of these, let's see. No, I don't want to. Do I want to add all of those? Yeah, that'll give me my total manufacturing cost right there. Okay, and then if I take my sales minus my total manufacturing cost, I get my contribution margin, or my product margin, I think is what they call it, since we're looking at it by product. Okay, and so that would be my sales minus my total manufacturing cost, or $220,000. And I'm going to go ahead and add some commas to this so we can see what we're doing. Okay, Pathfinder, it's the same idea. We are producing and selling 80,000 units. The sales price per unit is $99. The direct material cost per unit is $53. The direct labor cost per unit, again it's per unit, is $12. And my manufacturing overhead is applied based on direct labor hours, and it's 1 direct labor hour per unit in the Pathfinder, and it's based on my 1650 predetermined overhead rate. So again, I'll sum my total manufacturing cost and get $6,520,000 and a product margin of $1.4 million. And then I can just sum across to get my total. Okay, now remember, this is based on 1 predetermined overhead rate. 1 plant-wide predetermined overhead rate of 1650 is the way that we're applying our manufacturing overhead. So what we're going to do next, I'm assuming, let me go back to my problem. Okay, so they're considering replacing their traditional costing system with an activity-based costing system that would assign manufacturing overhead to the following 4 activity cost pools. Now it asks us to do the same thing and apply our manufacturing overhead, but this time we're going to apply it based on activity-based costing. Okay, so up here, you know, we have 1 overhead rate. So this is an or. You do it this way or this way. You don't do both. But we're going to do both because we're going to compare and see which one we think gives us a more accurate price. So what we're going to do for every one of these activities, we're going to have a rate for each one of those. And so in our activities, let me get to my activities. Okay, so I've got my activity cost pool. This is my supporting information. I've got supporting direct labor, that's 1. I've got batch setups. And these are going to be different for every organization. We're just looking at what activities are happening and have a material amount of overhead allocated to them. So those are the 3 cost pools. I believe what was given to you in the problem also included other, but we don't include that because that is organization sustaining and it's idle capacity cost. In other words, if their activity is not happening, those costs still do happen. So we would not include those in our activity-based costing. So then what we take is our total cost for each one of those. And they're given to us, $783,600, $495, and $602. And then we're going to look at what is driving up those costs. And that has been predetermined for us, that supporting direct labor is based on direct labor hours, and that's 120,000. I'm going to put what the driver is over here. This one is driven by setups. This one is driven by products. Okay, and so our rate will simply be, for each activity, our cost divided by whatever our driver is. And so we're going to assign $6.53 of overhead in the supporting direct labor cost pool for every direct labor hour